Hello, welcome to Rule Classroom. I'm Albert Liu, joined today by Rick Rule and our special guest, Robert Quartermain, President and CEO of Dakota Gold, also an inductee to the Canadian Mining Hall of Fame. Welcome to both of you, Rick, Robert.
Thank you, Albert.
Yeah, thank you.
So today we have an interview that's going to be, I think, of great interest to a lot of investors. So I'm just going to throw it to you, Rick. Take it away.
Thank you, Albert. Ladies and gentlemen, we should begin by saying that today's guest, Bob Quartermain, and I have done business and frankly been friends for almost 40 years. Disclosure of conflict. I think I've owned every company that Bob has been involved in, and I'm a shareholder, a happy shareholder of his current endeavor, Dakota Gold too. I don't know whether I'm bragging or disclosing a conflict of interest. Suffice it to say, for you all, forewarned is forearmed. There's going to be a lot of parts to this interview today. We're going to discuss something about Bob's background. We're going to discuss his successes and some of the pitfalls that he experienced on the way to the success. And the reason that we're doing this is not merely to focus your attention on an illustrious career, but also to let you understand the way a serially successful entrepreneur builds a mining company. Understanding that will give you better ability to identify successful entrepreneurs like Bob Quartermain, and a better understanding of how to invest in them as they go about building the company. Understand that this interview today will be very pleasant for me, but that isn't the whole goal of the interview. The whole goal of the interview is to make you a better investor. Towards the end of the interview, we will take you through what he's doing currently. I will ask him tough, but hopefully not impertinent questions. And you should listen to the answer in the context of the lessons that he has learned in a 40-year career building mining companies. It's important that you understand the information in today's interview in context, both in terms of the opportunity that's on offer, but also in terms of your own performance as a natural resource investor. Bob, after that long-winded introduction, first of all, thank you for 40 years of friendship and success, and thank you for agreeing to appear in the interview today.
Well, thank you, Rick. It's a great pleasure to be here. And I always look forward to our times together, whether on screen or whether in the real life, traveling in Africa or anywhere in the world we've been to.
We've been extremely lucky together in many senses. Let's take you way, way, way back. First of all, given your upbringing, how is it that you decided to be a geologist? What is it about, traipsing around the far north, getting bit by mosquitoes was appealing to you?
Well, I grew up in small town New Brunswick, St. Stephen, New Brunswick, and I had gone to the University of New Brunswick actually as a computer scientist at the time, and I had to take an elective, and so I took geology as the elective. And in my third year, I needed to get cash in order to provide for my education the following year, and applied for a job. And I got a job at the Geological Survey of Canada, working, as you pointed out, in Baker Lake, which is kind of the center of Canada. If you look at the 3 points, Alert to the north, and St. Stephen, where I'm from, in the east, and Vancouver in the west, it's in that center area, just south of the Arctic Circle. So I spent 4 months there mapping, and fell in love with the north. And so as a consequence of that, when I went back to school, I completed my degree in geology, had a little small minor in computer science, but really focused on the geological aspect, and started my career at that point in time, working in exploration camps across Canada. But over the next 3 years, in 77, 78, and 79, ended up going up into the Northwest Territories. So it was more from the fact that I was a Boy Scout, I enjoyed camping, and someone actually paid me to do something I liked to do, which was go travel and go out hiking, and the mosquitoes and other aspects I could certainly put up with. But it was a great start to a career, and it was in doing that work that I realized I should go back and ultimately get my master's, and did that at Queen's University in mineral exploration and mineral economics. And that led to the next start of my career of working at mines and being involved in junior mining companies.
Let's back it up, back into the exploration phase a little bit. Uh, Give me a bit of an overview of what you did, if you developed what you would consider to be any specialized expertise, either regional or rock types, because those were your formative years. I think part of your success as a businessman has been that you've been a pretty good consumer of geological talent. You haven't had the time for 30 years to go do raw work in the bush. Rather, you have commissioned and supervised other people's work in the bush. So tell me about how you developed enough expertise that you could become a good consumer of other geologists' work.
Right. Well, when you're doing traverses every day, as I would, you would be walking perhaps 15 to 20 kilometers. We would do the mapping. We would take rock samples, take it back. So you got to really understand what the rocks were. At that time, I started working in uranium and also in gold. So I first started working with gold in 1977 when it was $140, $150 an ounce. And you would map in the Northwest Territories. So these are shield rocks. They're Precambrian rocks. They're, perhaps 1 to 2 billion years old. And so you get used to the Canadian Shield, where I got that expertise working with those different type of rock types. We also did a lot of drilling, and as a result of that, had many successful holes, but also had many holes at that time that didn't pan out. But it did teach me that looking at that drill core, and I logged many meters of drill core myself, is that ultimately, if I was going to be exploring for mines, I wanted to know what one looked like. And that ultimately led me to get that underground experience, and doing mapping underground in mines is very detailed geological work. I worked at the Lamaque mine underground for Teck, and you would do stope mapping, where you're mapping basically by feet, looking at the geology. And that certainly helped inform my career throughout, the fact that I'm a relatively good bush geologist and certainly a good mapping geologist underground.
So early in your career, you were involved in what would be probably more likely described as grassroots or generative exploration.
Correct.
Then
Yes.
after, if I understand it correctly, after you got your master's, you wanted to understand what successful geology looked like. And so
Right.
you were involved both in drilling off deposits and then, as you stress, importantly, doing the underground development mapping at Lamaque. Is that an accurate summation?
Yes, definitely. I mean, lots of exploration activity in those informative years, and certainly subsequent to that. But if I was going to be an exploration geologist and find mines, you needed to go work at one and actually kind of get an understanding of how it operated and what the geology needed to look like. Because many times we can have mineral occurrences that may look good, but when you actually get down to the geology and material handling of how you're going to be able to put those in production, that's a slightly different skill set. And so working underground at Lamaque, and then as we'll talk about at Hemlo, which was very informative for me, that helped my career going forward in being successful in trying to identify projects that ultimately could be developed.
Some of our listeners are too young or from other countries, but let's move on to Hemlo now. Let's start with your description of what Hemlo is and why that's important. And then let's talk about how early you became involved, how you became involved, and what you did. Let's have the Hemlo story from the Bob Quartermain perspective.
Right. Well, I was working at Tech, and after Lamaque, they sent me in. It was in the spring of 1982 to go to Hemlo, where they had a joint venture with a company called Corona at the time. I believe the discovery hole was number 72, and I arrived at hole 96, so very early on. And it was an incredible time in my career. I was young, and there was lots of activity going on for the markets. At that time, I'd never been an investor. I didn't own a stock or share. I certainly did during the Hemlo days. And the David Bell mine is a strata-bound gold deposit. It has very consistent gold mineralization, runs 8 to 10 grams. It also has moly and barite in it. And we were able, as geologists, to kind of estimate how much gold we thought we would have in a drill core based off the amount of moly and barite. So we could tell the office what we thought would the drill holes would be come in at. So exciting times. I was there for 3 years, starting in '82, and right up through till drilling off the David Bell mine, seeing it being placed in construction. And then also I was a mine geologist there for the first 3 levels of production. So that was my first time of seeing something where it was being drilled and there was no determination on it, to ultimately being the great mine it was. The David Bell mine with the Williams and the Golden Giant and Goliath ultimately has produced over 22, I think, million ounces. And today it's still an asset of Barrick and continues to produce here some over 40 years later. So it was a great long-term mine.
I think that's right. I think that's something that we need to stress to people. This is a mine. By the way, I think your cumulative production totals are conservative. I think it's
Okay.
produced in excess of 25 million ounces. But it's important for the audience to know that in terms of gold discoveries, this is probably, with all due respect to Malarctic and Detour Lake, the most profound gold discovery in Canada in at least 50 years.
Yeah, and the fact it was under the Trans-Canada Highway. If a geologist would drive by it, it was altered there. Just someone went out and took a sample of it and thought, well, there's some alteration here. And lo and behold, they found gold mines that helped certainly finance Teck, Noranda at the time, and Lac Mineral was involved. So it was a great time because there were 3 head frames all lined up within a mile of each other. And what was unique about this project, Rick, is that they put them in production without ever going underground and looking at the mineralization. In the case, I think Teck invested $75 million for David Bell, which in 1982 was a lot of money. And to do that based off drill core, the geology was so consistent, right, and people felt so positive about it. And even Noranda, they must have invested, I think they were over $200 million at the time at a 4,000 ton a day operation without ever seeing other than in 2 to 3 inch pieces of drill core. So that was quite unique in that regard.
One of the things you said earlier in this interview struck me, and I think it's useful for our audience, and that has to do with persistence. You say that the discovery hole was number 72. Is that what you said?
Yes, I believe that was the case. Yes, correct. Yeah.
There's a whole bunch of lessons there.
Right.
First of all, what is it that people saw in hole number 5 that caused them to drill number 6, 7, and 8?
Right.
What is it that allowed Murray Pezim or whoever was the ultimate driver of that discovery to persist until hole 72? I understand perfectly that what they saw in hole 72 made hole 73 very easy to drill. But one wonders what happened around hole 65, why they kept going.
Right. Well, in what they called, I guess, the West Zone there, they had some conglomeratic units. So there was certainly background gold grades, 1 to 2 to 3 grams, which, of course, at that time would not make a mine. You really needed to have that 8 to 10 grams. And as you point out, Murray Pezim was promoting Corona stock at the time, and David Bell was the geologist who was there. And David came from the Timmins camp, so he had a great deal of experience in shield rocks and dealing with these types of gold systems. And it was his persistence saying, we found something interesting. We need to continue to drill it. And ultimately, as you say, in hole 72, they discovered it. And to Teck's credit, very quickly, Teck had been monitoring it and was able to do a deal with Corona at the time, where Teck came in and agreed to fund the next $1 million of exploration for 50% of the property. And then, interestingly, Tukey Angus, who's no longer with us, put an area of interest clause that any claims that Corona might find within a 1 or 2 mile radius would get included with the joint venture. And ultimately, the class action or the lawsuit, which went on with Lac Minerals at the time, was ultimately found in favor of Corona. So then Teck became also part owner of the Williams mine. And so it was a great turnout for that. But it was David Bell's persistence, as you say, from hole 3, 4, and 5 to go on and ultimately get to hole 72. And I say it was a great part of my career with the activities that went on, the stock market activity, and Murray Pezim, bigger than life, being involved. It was certainly great for young geologists to learn.
And did you have the opportunity to observe or inform Murray Pezim at any point in time during this?
Yes, Murray flew out once to visit the mine area where we're going to actually be building the project. He came to visit the local mayor, and we had a shovel, and I took the shovel, which we used for various works, and spray painted it in gold, and came over and put a big X where I thought we were going to put the shaft in, and gave the shovel to Murray and said, Murray, here's where we're going to put the shaft in. Gave it to me, took the shovel, moved it, and was quite proud. And so when he finished, I went to grab the shovel and said, we need that for our work. And he said, no. So years later, when I came to Vancouver, that shovel was mounted behind his office. He was quite proud of the fact that he was able to do it. So I had some interaction with Murray then, and also with Western Copper Holdings as well. So a great character.
So I think it's fair to note that in addition to being a journeyman geologist, you became a journeyman promoter during that circumstance. And not to belabor this, but I'm going to belabor it anyway. How much time was elapsed between hole 1 and hole 72? How much up and down did the market have to endure before they got a sense that they were onto something?
Probably over the course of a year, Rick, they were at a couple of drills drilling it off. And as I recall, as you would know in these situations, those who didn't believe there was a mine there got shorting, and that stock, kind of went from 50 cents to $30 and back down to $2 or $3 and then back up based off of drill results. So it was over the course of that year. But they say Teck was on it once they started seeing some results coming out. I was amazed how quick they moved, and then how fortunate I was by being able to go from working at Lamac as an underground mine geologist to then working at Hemlo on this exciting project. And only comment me. And we had 3 or 4 geologists, and we had 6 drills operating. We also had 2 oil rig drills that we were drilling 6,000 to 8,000 foot drill holes, looking for the extensions on what was the Inner Lake property, and also I forget the other name, but the Inner Lake is actually a property which is still owned by Franco-Nevada with a royalty on it. We drilled down 8,000 feet and found some mineralization in 1984 that wasn't very interesting, but with current gold prices and Barrick still operating down there, it actually provides a royalty. So your persistence pays off.
I had forgotten about Interlake. I was an Interlake shareholder, so you brought a smile to an old man's face. Thank you for that.
Well,
and then as the increase in interest by Teck in the deposit came about, you had an interview with Norman, I guess a long series of discussions with Norman Keevil. Tell me something about how you learned about how mining executives deal with young geologists like yourself in terms of maximizing their benefit from your labor, and the lessons that you learned that have served you since doing the same thing with others.
Well, the great thing I learned from Dr. Keevil is when I first started there, both Dr. Keevil Sr. was still with Teck, and Dr. Keevil was running it and CEO. And they were both technical individuals. They were geophysicists by training. And so when you had a technical individual who was able to apply good commercial senses around what they were doing around geology. And the Keevils were known very much for their adeptness of recognizing mineral occurrences that could ultimately become mines and help grow Teck into the huge corporation it is today. And so just being in that ecosystem was great. I had interactions with Dr. Keevil, and certainly my mentors at the time were John May and Matthew Blecka, who were my immediate bosses. And they gave us the opportunity to run and drill the program and do what we could with such a very small crew of individuals. And it was a great place to learn. And the great thing about the Keevils is everything was done on a handshake, and you learned that. So if you were doing something with respect to mining claim, that's the way Dr. Keevil would conduct business, and also indicated that you wanted to manage royalties. If you were going to give a royalty in a project, keep it down to a few percent, because ultimately that would be shareholder equity you're giving out down the road. And so that's something that I've certainly maintained through my business practices as I've developed projects and looking at the underlying royalties that you give away for other consideration at the time.
Let's move on now. You drill off Hemlo, but then you have the ability, after Hemlo's been put into production, to, at least for the first 3 years, be the mine site geologist. Are those lessons that you have continued to benefit from, first of all?
Oh, for sure. Being able to go underground gives you a lot of understanding of geology and the rocks. I mean, one anecdote that came from there is that the mineralization at Hemlo deeps quite steeply, and you can see that in the foliation of the rocks. And when the mining engineers planned the head frame, they had it oriented one direction, and I just said to them, "Listen, if you go long along the schistosity, you could end up with more breakage getting into the head frame and the shaft. So you probably should look to orient it the other way." So it's taking practical geological knowledge and having an economic outcome from it that was positive, right? That it would have saved. So there were things around that, and then just safety in the mine, all the things that we had to do. I would go up and down ladders. At the time when I was mapping, there weren't the shaft wasn't in, the head frame wasn't on. So I was mapping going up and down the ladders. So I'd go up and down. I was doing down through, so maybe 600 to 900 feet of ladders at a time. You'd go all the way down and map, and then have to walk all the way back up. So you just want to make sure you took your lunch with you when you did that. But it was fun, and that again, that knowledge has been able to carry with me throughout the career as we evaluate projects, which could either be underground mining opportunities or superficial opportunities.
So now you've spent 5 or 6 years of your life, and you've watched Hemlo go from being some pretty good drill holes to the most important gold mine in Canada. But all good things come to an end. You leave Hemlo, and you go to Vancouver. Tell me how that took place, and tell me precisely what you did after, for Teck post Hemlo.
Right. During the Hemlo time period, we actually had to meet investors, and as a result of that, I was an okay public speaker. I was in Air Cadets as a young man, and so I could get in front of a crowd and speak. And my boss at the time, John May, came to me and said, "Listen, you can either go to North Bay and be a bush geologist, or you could come to Vancouver and be president of Consolidated Silver Standard Mines at the time." To which I said, "Well, one, I didn't own a suit. I was a bush geologist. I'd never read a financial statement. I'd only met one lawyer, who was Tukey Angus." And I said, "How do I succeed at that?" And he was like, "Well, use your geological talents and Teck will support you." And they did. They gave me a lot of support, and we were able to take Silver Standard. And through that group of companies, once I got running Silver Standard and we started focusing on opportunities, and it was also the same time I met Ross Beatty, because the board of Silver Standard was largely populated with Teck employees. So Ross came on in '85. So I met my good friend Ross then, and started looking for opportunities with respect to Silver Standard. And then I would get the other companies within the Teck cohort, which became Mutual Resources, Lower River Gold Mines. We had Greater Temagami Mines, Gold Tech Mines, Western Copper Mines. So one time I was president and CEO of 9 different companies, all focused on a variety of opportunities. But as you know, Rick, back in those 90s, the late 80s and 90s, raising capital was very challenging. And so we would have to go out and raise money. One of the first raises I did in Silver Standard was in 1985. The company had a market cap of around $1.8 million. There were 1.8 million shares out trading around $1. And we did a rights offering with Continental, Carlyle, Douglas, Gus McPhail, and Teck backstopped it. And the rest would say with history, until you came along a few years later, and we did the next major financing, which was $2 million, as I remember. We did 3 million shares at around 78 cents. And Silver Standard went from that point on to what it is still today. So it was a great opportunity from Teck to come out. And then on the job training, I had to learn how to read financial statements. I had to learn to read documents. But at the same time, as Dr. Keeble said, the key thing was geology. Always focus on the good geology, and then the rest is associated with it. But don't let process and deals drive it. Make sure you have good geology and then curate to that. So again, good lessons from Teck at the time.
Before we get deeper into Silver Standard, which believe me, we're gonna, let's talk about a few of the other companies in the portfolio that you were around. Let's talk about, as an example, Western Copper, what it did, where it went, what it is today. People don't know this about the Bob Quartermain background because I was there and an investor. I do, but it's a story worth telling. So let's start with Western Copper.
Yeah, so Silver Standard was very successful exploring in British Columbia, which is why Teck took an investment back in 1969. So they ended up owning about 30% of the company. And it had three large copper projects within it. It had the Red Chris deposit, which is in production now. It had the Minto deposit, and it had Shaft Creek. And it had those interests in it. And so when they decided to roll the stock back from 9 million shares to 1.8 and refinance it, Teck had spent many millions of dollars. And so they wanted to preserve that interest. So they created Western Copper Holdings, which held Teck's interests in those three projects. And so kind of 1987, the determination was, well, we're doing all the Silver Standard. Let's take Western Copper public, which we did in Toronto. We brought the Carmax Copper project into it, and I worked along with that with Dale Corman. And then we also wanted to do some exploration. So we went down to Mexico and looked at a copper opportunity there that Martin Sudi had, and picked that up. And then we did an option back to Teck on it. And they came in and drilled it and actually found the San Nicolas deposit on that project. So that was a great, again, discovery that came by listing it publicly. And then we continued to do work with Dale Corman, merged Thermal Energy with Western Copper, his company, and then went down and picked up the Penasquito project, put it into Western Copper Holdings, called it Western Silver. And of course, it ultimately became part of Glamis, which became part of Gold Corp, and is now a major mine of Newmont's.
And Golden Knight. Let's do Golden Knight.
Golden Knight, it had the Casa Berardi mine in, which is located in the Shield in Ontario. It was a good operating mine. It was a 60-40. We were the minority partner in Golden Knight. And it operated fine. But in the mid-90s, I had been shown an opportunity in Africa called Tarkwa. And I went over there when it was still being drilled off. There had been no resource done. But meeting George Flack at the time, who was the geologist, we kind of looked at the drill core and thought, you know, there's probably 8 million ounces of gold here. But when you looked in the distance on this Tarkwayan deposit, we thought, well, there's probably maybe upwards of 20 million ounces here. So we picked up a 5% interest in the Tarkwa mine, which was being vended by Tony Frizzell. We put in Mutual Resources. We saw that was going to be quite sizable, so we vended Mutual into Golden Knight, and then we went out and raised $60 million, bought another 15% or so, and so we became the minority interest with Goldfields at Tarkwa. So I was there again through all the discovery. We then did all the permitting on it and did the financing and actually construction for the very large open pit gold mine it is today. I think it produces somewhere upwards of maybe 400,000 to 500,000 ounces of gold. Ultimately, Golden Knight got merged with IAM Gold. We ended up being on the wrong side of the gold price in 98, 99, needed some funding, merged with Repadre, which became IAM Gold. And then subsequently, IAM Gold sold that $60 million interest I bought for, I think, close to $700 million. So it ended up being a good trade. But
very good trade.
A project by arriving when it was in exploration and just saw the opportunity that was there, and then went all the way through from drilling it off to actually putting it in production.
And now let's do Silver Standard. I met you through the good offices of our mutual friend Ross Beatty. I had an interest in silver, or rather I was reflecting Jim Blanchard's interest in silver. And you had a wonderful name in a company called Silver Standard, which was really, when you and I met, all I knew about it. It was actually a very interesting collection of assets. But what was maybe more important was your willingness and Teck's willingness to go into the sector of the market that nobody else was in and build a mining company in a way that hadn't happened before. So talk to people about the success that was Silver Standard.
Right. And as you point out, Rick, it was one of the more challenging financings I've ever done in my life. Was our financing of negotiating 3 million shares at 78 cents. I know I wanted 80, and I guess it was our friend Ross Beatty said, Bob, for 2 cents, do the deal. And people, that stock went from 78 cents to $45. So it was very good for individuals. But the key thing was, let's go out and find silver resources in camps where there was a resource to find, but no one was still doing any work because silver prices were down at $3 and $4 an ounce. And so we started doing that, as you know, with the financing you were able to put in place. And we did subsequent financings at $1.50 and $3 and $5. But we caught the silver price right with the, I think Warren Buffett had bought some silver and drove the price from $5 to $7. And we're able to use that. We ended up having 17 projects around the world. And a few of those became mines. We first started by buying the Mudgee project in Australia, which is still being looked at, as you recall. And then we started looking further in the States and then throughout Mexico and down into in South America, and ended up having an interest in the Manantial Espejo project, which we picked up and started drilling. And then Ross Beatty went down and saw that. We ended up joint venturing it and then ultimately sold our interest to Ross. When Sunshine went bankrupt, we went down and picked up the Pirquitas mine in northern Argentina, which was an open pit, which we then went on and funded and put that in production. We discovered the Piteria project. We were fortunate, as you may recall, at I think it was the San Francisco Gold Show in 2002. And I met Bud Hildemeyer and Perry Durning, and they wanted to be grub staked. And so we went off and said, we'll grub stake them. I came to you and said, they want $20,000 a month. And so we needed to kind of raise $250,000, which was a lot of money at the time. And 10,000 went for their salaries and 10,000 went for them to roam around Mexico. And from that, they found the Piteria project. And perhaps more interesting, they found this project which had they were driving along a road and there were red rocks in the road. So they called it Camino Rojo. And we were looking at silver and we analyzed it and come up as gold. So we're like, well, we don't really want gold in the company. So at the time we had a company called Camplats. So we ended up sold the interest we had in Camino Rojo into Camplats, which then became, which is now part of Orla and that Camino Rojo project they're developing. And, with the other, projects, as you did in one famous call to me, I think in around, again, 98, 99, said, Bob, I don't know if you know, but New Hawk Gold Mines has the Brucejack project. It's got 20 million ounces of silver in it and a couple $1 million in the bank. And so we approached Homestake, which interestingly, and where it comes back to where I am right now, Walter Sedgeworth, about doing a deal. And we merged New Hawk Gold Mines with Silver Standard. And at the time, we were looking at the silver in the West Zone up the Brucejack mine. And we basically put it in isolation because at the time in 2000, money was very hard to come by. And that $2 million that we came out of that merger allowed us to survive for a long time. We also had a slight side escapade in Russia. I'd first gone to Russia in 89, looking at projects for tech. In 98, we get introduced to the Luno project and went over and spent $5 million on was a great Russian asset, but ultimately realized that our Russian partners weren't as commercial and understanding of opportunities as we were. And so we ended up having to leave the country and it almost bankrupted us. But we got $1 million out of that investment, and that along with the New Hawk allowed us to continue to advance Silver Standard. And once we sold our interest to Ross with Manantial Espejo, allowed us to go on and build Pirquitas. But more importantly, during the time period with the run up of gold prices in 2007, 2008, we went up to Brucejack and said, there's gold here as well, so let's start drilling it off. And we basically took an old drill hole that had been drilled back in the 80s by Don McLeod and never followed up. It was, I believe, like 100 feet of 0.1 ounces of gold. We ended up finding the Snowfield deposit, which was 1 billion tons of a gram of gold for 30 million ounces. Then we went over to the Brucejack area, was the same alteration. And in 2009, we drilled that hole number 16. which ended up having something like 12 kilograms of gold over 1.5 meters, the most spectacular drill hole I'd had in my career. And that then allowed me to say that this is a unique asset, such high grade and low grade could possibly be a mine. And those at Silver Standard disagreed, and I ended up retiring, as you know, in January of 2010. And subsequent to that, went on and put the Pretium project in production. But the Silver Standard of going and finding resources on a call option, when they were out of money, we accumulated like 1 billion ounces of silver in these 17 projects around the world. And then ultimately the price came up, which allowed it to be put in production.
Now that was the Silver Standard was your first come to the world success, one where you were a shareholder and importantly, one where you were the boss. Talk to me again about the Silver Standard thesis. The idea that you could buy deposits that had 60 or 70 million dollars spent on them because at the then present silver price, they had no net present value. I remember you paying 5 cents an ounce or 10 cents an ounce for, as you say, 1 billion ounces? I mean, an incredible amount of silver. Talk to me about that.
Right. Yeah. There were many projects that when the, silver price had been higher, certainly back in the 70s and I guess in 80s, when silver went up to its high point of $50, many people are not looking at projects. And you're right, by the time that the 90s came around, that silver price was down. Many of these projects had many tens of millions of dollars spent on it, particularly if you were to look at the Pirquitas mine in Argentina. That Sunshine had spent a lot of money developing it and unfortunately got on the wrong side of the low silver price and had to sell it. But the thesis that we came up with, supported by Jim Blanchard, was to find these silver assets in the ground and ultimately the price would rise and you'd be able to put them in production. And that thesis held true, certainly to 2007, when I say, we picked up the assets like Manantial Espejo, which is still a mine today, having started that back in over a decade ago. The Pirquitas mine has operated fine. We picked up something called San Agustin, which is now I guess the mine that Argonaut has, which is now part of Alamos. The Pitarrilla mine certainly didn't get put in production, but, a number of these assets ultimately were able to be developed with the rising metal prices. But we looked at many projects throughout the world, all over Latin America and through Mexico. And that's why I say we were running 17 projects. We had 3 to 4 country offices. So it was a long way to go from that bush geologist working in a tent in 1977 to, operating 20 years later in 2007 with one mine being developed, interests of other projects, and a global enterprise and a company that was worth about $2.5 billion.
And it's important to note that a lot of the assets that were in Silver Standard were ultimately sold out of Silver Standard, and an awful lot of the success of SSR today has to do with the proceeds that were assembled,
right?
The portfolio that you built.
No, that's very true. As you point out, we wouldn't pay more than 10 cents an ounce. Often we would pay 5 cents an ounce. And sometimes the US dollar and Canadian dollar were like they were today. They were trading at 60 to 70 cents. And people would say, well, I'll do $1 million, but it's $1 million Canadian. We bought the Shafter mine that way. The Silvertip mine, we paid $1 million for, ultimately sold it for 15, and now it's part of the core mining organization. So you're right, we accumulated many and they got sold out, even the extent that, Brucejack and Pretium Resources, when you think about it, that's an asset that you recognize we brought in for $3 million. If you take the 2 cash out, you could say in essence, Brucejack was bought for $1 million. And when we floated it and bought it from Silver Standard, we paid them $450 million, which was about $220 million cash and the rest in stock. I think they netted $600 million out of that when they sold their shares, because the shares we did at $6 and ultimately to 18. So that was an excellent trade of an asset at the time in the 80s, which couldn't be developed till when the price was able to allow discovery to occur. Because again, we had to have that perseverance at Brucejack the same way. We had that first hole with 12 kilos. It took many more holes to be able to ultimately put a resource together around it. But the thesis was good: buy low and then sell high, and that funded Silver Standard.
There was some early warning there too that I think happened probably as a consequence of the experiences of your career. You looked at a very large, low-grade disseminated gold deposit, very much like the KSM, across the fence. And I think, correct me if I'm wrong, you were thinking there must be some place where there's sufficient rock preparation
Mhm.
for these fluids to consolidate. Maybe McLeod had found that, but you identified the Brucejack fault
Mhm.
as, or at least cross faults on the Brucejack fault as the potential controlling features. In other words, that deposit, the great big low grade deposit, which you drilled a bunch of in Silver Standard, still hasn't been put into production. But there was some form of geological vision that allowed you to identify a very high grade core in what is ultimately a 100 million ounce low grade deposit. Talk to me about that a bit.
Right, as you point out, and part of the success of anyone, including myself, is the team you have around us. I mean, early on, Ken McNaughton joined Silver Standard, and Joe Osnick joined as well. And then when we were working up at Pretium, we brought in Dr. Warwick Board. So you were able to bring in good talent. That's a good thing, as I recognize what my shortcomings are. I'm a reasonable geologist, but when you get into some of the details we needed to look at with respect to the high grade nature of the Valley of the Kings, as we called it, is you're true. There was this structural feature running through. We were just drilling off Brucejack at 200-meter centers and hit this high grade feature. And as you point out, you've got Snowfield, you've got KSM across the side. So you're looking at somewhere around probably 100 and many billions of tons of rock, which hosts probably 120 million ounces of gold. But specifically within this structural trend within the Valley of the Kings that we recognized at Brucejack, it gets concentrated. And the one value that allowed me to recognize that and have the persistence with the development of it, because we did have some issues around whether the grade would be there. There were some people who didn't fully agree on that, was my experience at Hemlo and my experience at Lamaque. Lamaque is a high grade, nuggety underground gold mine. And we would often have to go mine a stope. I was a stope geologist. You'd see, well, we got enough drill core here. We think there's going to be 7 to 8 grams. We would go mine it. 3 times out of 4, you were right. One time it made you didn't meet the grade, but ultimately needed 3 grams to make the mine work. And then at Hemlo, you have these nice wide zones. And so when I started looking at the drill core that we were getting up at Brucejack, the thing that I was able to recognize is there was lots of low-grade gold, 1 to 3 to 4 to 5 grams, and then these high-grade multi-kilo shoots. And it was probably more of akin to something like a diamond mine. You'd have this low-grade results, which were coming up. And then as a result of that, you had this high-grade area within it, which had been remobilized. So we know from age dating that the mineralization at Brucejack, the low-grade, is about 185 to 187 million years old. And then the high grade is younger. It's like 185 to 184, 183. So it was a remobilization of gold into this structural area that you point out, Rick. And it happened very quickly. I have a piece of drill core here. And the key thing about it when I saw it is here's high grade gold, and there's very little alteration salvages around them, which meant it had to devolve into solid solutions extremely rapidly. And if it did that enough to create 2 to 3 inches of massive gold, there's going to be a lot more of it. How do you drill it, and how do you find it? And then how do you characterize that to be able to go mine it? And that became the challenge. But because of the good team that we had at Brucejack, many senior mining companies came and looked. They couldn't convince themselves. And so we, as a geologist and engineers and the group we worked at Silver Standard, went out and raised the ultimately $600 million and put it in production and created Canada's 4th largest gold mine with good geology and recognizing an area where we had concentration, which doesn't seem to occur elsewhere in the region or hasn't been recognized yet.
So you got rewarded for being a forward-thinking person. You had a pretty good hit personally out of Pretium. You have enough money to quit, not go back to work for the rest of your life.
Mhm.
As I recall, you retired for 4 or 5 weeks, something like that, before you began dabbling around again. But I remember you saying, okay, I've been there, done that. And here you are, CEO of Dakota, like myself, having failed retirement completely.
Right.
Tell me something about the genesis of the opportunity of Dakota. And more importantly, there's a great American financial commentator. Her name is Janet Jackson, sister of Michael Jackson. And her famous statement was, "What have you done for me lately?" So
Right.
let's talk about Dakota, how it came about, and what you see the opportunity as being today. What are the challenges? What can people look forward to?
Right. So as you pointed out, I turned 65, I retired from Pretium. I had done reasonably well from that. And I had a business associate that I'd worked with in Vancouver, John Odd, who asked and said, "Why don't we put together a private company and look for assets?" He said, "I'll look for them, and then you look at the geology, determine if you like it." And a few months into that, we were shown the homestake opportunity, which Jerry Aberley had been working on for some time. And I guess, Rick, it was a culmination of the two things, both what you and I, what we did it, and the team did at Silver Standard, of recognizing an opportunity in an old mining camp, and then also seeing something near production. And
And Bob,
so,
describe this camp. Don't gloss over the camp.
no,
What
no,
is homestake?
yeah, oh, for sure. I was going to get into it and say, so we went down to this camp, and so the homestake district has produced close to maybe 50 million ounces when you look at a number of the mines. The key one there is the homestake mine itself. It's a banded iron formation, similar to what I was familiar with working in the Northwest Territories, the Lupin mine, the Musselwhite mine, which Orla now owns. And these are really wonderful deposits because they concentrate a lot of gold. So the homestake mine, discovered in 1878, shut down in 2002, produced 40 million ounces, basically 160 million tons of ore at about a quarter ounce. And it operated at its best years, producing 600,000 ounces. At the end, it was producing 300,000 ounces a year. But it was a really premier mine in the States during the Depression. The homestake mine is known to have really helped not only the state of South Dakota, but also the U.S. government itself. So you have this wonderful resource that had been explored all that time and mined, but never really been explored regionally. North of where we are in Maitland had received no exploration. And so I go from the adage that, one of the best places to find ore bodies is in the head frames and the shadows of head frames. And so here was an opportune situation in the homestake mine where no one has done any exploration there since 1996. Homestake did some work and then decided to shut the mine down because at that time gold was $260 an ounce, and so it wasn't highly profitable. They were mining down at 8,000 feet. So for those of you who go on and go to our website and follow our presentation, on page 4, it actually shows. And what I like about this district is it's so contained. If you talk about the Carlin district, it's got 90 million ounces. That's spread over 60 miles. If you talk about the Timmins camp, that's 70 million ounces spread over 20 to 30 miles. The homestake is 40 million ounces spread over 2 miles. And we've got 3 or 4 miles of strike extent. And we've actually gone, and I'll talk about in a minute, we've gone and been drilling on it. But adjacent to the homestake mine is the Wharf mine, which was put in production back in 1982 by Ed Schultz. And a couple of the people that work for us now, Ron Everett and Tim Comer, were actually involved back then. So we have this great longevity, which intellectual capital is so important in this industry. People were there at the start and still around now. So that mine was placed in production. It's produced 4 million ounces of gold. And it's a great cash flow generator for Core. This year, I think the mine's going to generate something like close to 100,000 ounces. And looking at their last financial statements of projecting, it's going to produce maybe $100 million of free cash flow. And I guess, Rick, ultimately the thing that I learned from you and certainly Dr. Keeble, we're here to make money. These things have to generate and produce a return back to shareholders as well as capital appreciation. And that's the opportunity that we saw at Richmond Hill, was that surface analogy to the Wharf mine, and all the while having the strike extent of 40 million ounces of one of the top premier gold mines in the world.
So let's back up a little bit, Bob, for our audience. The opportunity that you've identified is in effect a district with
Right.
more than one style of mineralization, more than one style of opportunity.
Right.
You have the traditional banded iron formation where you're
Mhm.
looking for strike extensions, probably
Right,
not
right.
depth extensions from 8,000 feet, but strike
Right.
extensions
Near surface, yes.
of high grade, typical homestake banded iron formation. Uh, Up dip, I guess, or in a related sense at least, you have more disseminated surficial mineralization, perhaps oxidized like at the Wharf, perhaps not. Is that correct?
That's correct, Rick. Yeah. So you're talking, yes. Mhm.
And you're pursuing those opportunities at the same time, as I understand it, you are looking for systems that might be parallel to but distal from the banded iron, the original homestake. Is that accurate? So in effect, three opportunities, or am I exaggerating as I'm prone to do?
No. That would be true because of the fact that we came in and we staked whole district. We got 46,000 acres. There's very few others because although Core was operating there, they were focused on their mine. So that was the opportunity I saw. John came and said, "Here's this opportunity. There's only a few claim stakes." So we came in and basically stake claims. We bought a lot of surface land. We have 13,000 acres of private land, which is important because both the Maitland property and the Richmond Hill property on private land, which means you can therefore go through permitting processes by working with the local county and the local state. And as you know, South Dakota is a red state, certainly has mining. It's been favorable to mining throughout its history. So to your point, we have the strike extent of the banded iron formation. And that was the discovery we've made this last year. We discovered what we call the JB zone, some area where no drilling has gone before. We went in, put a number of drill holes. We now have like 47 intersections in the JB zone, and they average about 10.6 grams of gold over 4 meters. The west ledges of the old mine, which produced 6 million ounces of gold, which are down plunge, they were 11.6 grams over 6 meters. So again, very similar. And that's what got me excited. We've now been able to find homestake mineralization where it's never been known before, and a target of a multi-million ounce potential when you look at Musselwhite, or if you look at what B2 is doing up at the Goose Project. Again, multi-million ounce potential, and we have it, and it's a 15-minute drive from the office. So when we think about the Brucejack project, and you've been up to it and seen it, and we have one potential high-grade underground opportunity 50 minutes from the office, and 2 miles away at Richmond Hill is a low-grade superficial oxide resource, very similar to Wharf, which we're exploring on. And then parallel to the old banded iron formation, we found a younger tertiary zone where we've got 25 holes in it, and it averages around 4 grams over 6 meters. And it's not too different, at least structurally, to what I worked at Hemlo. So I'm like, you're right. We put a drill hole in. Often we're getting at least 2 opportunities for shareholders to create value, and then focusing on the work we're doing on Richmond Hill by moving it along quickly, because we can take along that development pipeline, having an analogy for us with the Wharf mine next door.
So am I correct in saying that while you're pursuing 3 opportunities simultaneously, that the opportunity that looks like it will deliver certainty for shareholders first is Richmond Hill, or is that incorrect?
Yes, that is correct. I mean, we've announced a resource on it earlier this year in April. We had 1.3 million ounces of indicated mineralization, 1.1 of inferred. We just finished doing another 180 drill holes over 18,000 meters of drilling. We announced our final drilling last week on one of our best holes was 2.2 grams of oxide material over 50 meters. And that's, I believe, in slide 6 or 7 of our slide deck. And so we're now taking all of that data, including a number of intersections we had greater than a gram, and incorporating it into our resource. So we're going to have a resource out probably the first week of February and around there. We're collecting all that data right now. And we're already doing a initial assessment with cash flow study, which we expect to have out in May. And from that, we'll go right into feasibility study. Because we're next door to a mine We have many people on our staff that Jerry's been able to hire. Sean Campbell, our CFO, worked with Gold Corp when they actually sold the Wharf mine to Core. They say Ron Everett. So we have a lot of people, even James Berry, who worked at the Wharf mine, so we can utilize that talent to come up and say, what's this look like economically? And then if you read our slide deck, because of my association with Orion Mine Finance, they're the ones who gave us $560 million to build Brucejack. We've already lined a $300 million kind of line of credit up with them to help us fund this first opportunity to build it. So not only is Orion our major shareholder, I'm the second largest shareholder, but they've also allowed their balance sheet to advance it because they saw the success we had at Brucejack, realizing we've got a resource here. We're focusing on the oxide. We can move it along development relatively quickly. We're already doing our baseline work, so that'll help us with the permitting process, and then move that into feasibility. And we are hoping within this election cycle, while this administration is still in, that we will get that opportunity up in producing. And the fact that there are a few people, Governor Noem has now moved closer to the White House, and we have Senator Thune, Majority Leader, both from South Dakota, who are familiar with our project, that we hope are going to be able to advance it along development relatively quickly, using the model that we did at Brucejack, is good sound engineering, hiring good people, and then following the steps to be able to advance it going forward. So yes, to your correction, that's our main focus. But at the same time, continuing to look at the great opportunity we have at Maitland with high-grade gold.
How much money do you have in Silver Standard? In Dakota, and how long will you be able to pursue this plethora of opportunities before the money runs out?
At the end of the last financial statement, which was in September 30th, we had around $14 million in cash, and our burn rate, we've now shut our drilling down. So we're doing largely engineering work. So I would say that we have sufficient capital to get us well through our plans into the first half of next year. As you know, I always want to make sure you don't spend all of your money. So one always has to be aware of that. But for people right now, we have, sufficient capital to see the work we're doing with respect to the resource update and getting the engineering work done. And then once you've got the initial assessment with cash flow, which is similar to PEA, it does allow you to look at perhaps other financing opportunities. We're evaluating the silver component that we have at Richmond Hill, which hasn't been looked before. So there's always things like silver streams, which one can help use to finance and manage that dilution for shareholders going forward at a time right now when gold price is a little out of favor, and we're certainly seeing the equities under pressure. But in 6 weeks from now, or 5 weeks from now, we're going to really change, I think, the tenor of this company with this resource update, particularly focused on the oxide resources.
So we potentially, in 6 weeks with this resource update, have what you might aggressively describe as line of sight to a mine.
Yes.
Given the fact that the challenge with regards to mine finance, if the data is good, is in place, given your relationship with Orion.
Right.
And it's probably fair to say that we have two different opportunities. I don't know if it's a footwall opportunity that you described, and of course the opportunity around the banded iron formation. How much am I paying? What's the market cap of Dakota? What's the shiny price tag currently around these opportunities?
Well, the current price tag, we only are listed on New York Stock Exchange. We're an American company. We're based in Lead. Our head office is in South Dakota. Most of our employees come from South Dakota. Share price is around $2.10. And we have 90 million shares out. And so fully diluted, we're trading around $200 million US. And in our slide deck, I think, Rick, one of the more interesting slides is slide 13. And what it looks at, if you were currently a 100,000 ounce producer in the United States or elsewhere, looking at things like Orla, or looking at things like Core, or perhaps Alamos, their valuation and what they're trading is $600 to $700 million per 100,000 ounces of production. And that's what I see as the opportunity. We can see line of sight of that. You're right. Our dilution is not too great going forward. It's about execution. And you would understand, from being up to Brucejack, executing in South Dakota, where people go home every night to sleep, where there's power and roads, it's going to be cheaper. You won't have the same high cost. And it's one reason why, I own 8 million shares of this company, and I'm really convinced with the team we have in South Dakota, we're going to deliver for shareholders.
You keep making reference, Bob, to page thus and such and page so and so in the slide deck. Where might our students find that slide deck? And assuming that they wanted to learn more about Dakota, where might they do that?
If they go to dakotagold.com, they'll find it there with the current presentation from December. We've just updated it. And of course, in about 6 weeks, when we have a resource out, we'll be updating it then. And more than happy, they can call the office. Carling Glaze is our head of investor relations, more than happy to talk to them. And if any want to talk to me, you can get a hold of Carling or email me, and more than happy, as you know, Rick, from my time at Silver Standard, always happy to talk to fellow owners of our corporation and our enterprise, whether they own 1,000 shares or 1,000,000 shares, they're owners, and happy to discuss the opportunity with them.
Well, we look forward to our students doing just that, Bob. We've spent probably 100 hours trying to get the people in the real classroom to be better able to ascertain opportunities like this. And in a just grossly commercial sense, I hope our students remember to join us at the Natural Resources Investment Symposium, where you are a longtime honoree of the living legends, to learn more about your storied career, and also to learn more about the current opportunity. Hopefully by that time,
Right.
they'll be talking about the opportunity from the point of view of shareholders as opposed to potential shareholders.
For sure. Looking forward to being with you in July as well. And we'll have a resource by then, and we'll have an economic study out, and we'll have a great opportunity to talk about it, and some more drilling in the banded iron formation at Maitland.
Well, thank you for almost 40 years of friendship. Thank you too for laboring mightily to make me occasionally look smart as opposed to stupid. I've had some wonderful adventures with you. And thank you too for failing retirement and delivering this opportunity, both to myself and, more importantly, frankly, to the people who are members of the real classroom. We thank you.
Great. Thank you, Rick. Been a great pleasure.
All right, Rick, Robert, thank you very much for that wonderful interview. Want to remind everyone watching that for more interviews and content, you can always visit our online community for natural resource investors at realclassroom.com. Thank you very much, gentlemen, and I look forward to doing this again soon.
Great. Thank you, Albert.
Thank you.